What's up, everybody? Welcome back to another video. Um, I kind of wanted to talk about what we did this week and how I what my analysis was Monday through Friday for these trades, and I kind of want to talk about how this area here that we were aiming for actually played out. And again, I'm not making this YouTube channel for any kind of like signal trade entries or anything like that. This is just simply, again, my journey in trading ICT concepts. So I'm still learning terms. I'm still the terminology that he uses. I'm trying to put that into use and have a weekly journal to number one, be able to come back and analyze in the future and see where my mistakes were, what trades played out, what trades didn't, why they didn't play out. But yeah, let's go ahead and move forward. So I kind of took everything, all the drawings off of my chart to kind of show you what I was aiming for, right? So if you look at this here, we had this area right here was an area that for me was that sticks out almost like an obvious high, right? Where price could have stops if people were going short here. That somebody here would have a stop loss, right? So we were kind of like I aim for liquidity, which means that I aim where people would place their stop losses, right? I've lost a lot of money using support and resistance methods and learning older concepts. So I've kind of been able to turn that around and see how that plays out. So this is a really good example. Here we broke, and I'm going to kind of tell you my narrative in why we were aiming for this area here and this area here. Here we had a really strong bullish trend, right? You can't tell if we're going to stop right here. If this candle's forming and you don't see any of this, you don't know if this trend is going to continue to break these highs, this one and this one, or if it's going to want to come back and figure out, hey, do we want to tap into this gap, or this gap potentially, right? But once the next three candles open up and break here, that in a way gives me a confirmation, hey, it kind of wants to go a little bit higher, right? And where could we possibly go where traders could have their stop losses? Traders would have stop losses here, traders would have stop losses here. So it would make sense for the trend to continue here. And not only here, but if we look left, we have a fair value gap here, and we have a volume imbalance, which means that there's no candle and it's just wicks. There's almost I think before I called it a void, but this is a volume imbalance, right? And I can show you what I mean by why we would target that. This candle right here is a SIBI, sell side imbalance. It's an imbalance to sell. Okay, that would be identified as a SIBI. If you look here, you notice that after it tapped into this volume imbalance, it came back down and it closed. Okay, so let me kind of show you what I had marked up and kind of explain my thought process for the week, targeting these highs and targeting this volume imbalance. So I like to do a top-down analysis, and kind of what that means is we want to go from a higher time frame. These are the ones that I use. I use a weekly, a daily, 1 hour, 15-minute, 5-minute, and 1-minute time frame. Excuse me. Why do I use those? Well, one, I want to see if for the month I go into the week and I want to see where we're more likely to draw to, where liquidity rests, where stops are being placed. And depending on where the weekly is going, the weekly here would be bullish. I move down into the daily and see where that week wants to go. In this case, we want to aim for these highs and we want to aim for this volume imbalance, having a market structure shift here. From here to here, you notice that it breaks and it comes back down. It taps right on top of that. And that, like I said again, that confirms that this market wants to be bullish because this is a market structure shift. Or in other words, what people would, or what ICT would call it as a market structure shift. Now, I'm not trying to teach his concepts. I'm trying to show what I have interpreted from his videos and his mentorship on this YouTube channel. So that's what I would consider a market structure shift here. It's shifting up, right? We can clearly see that. So now that we have that market structure shift, we know that it could potentially tap here or here, because that's where, again, stops are being placed for people who have been on a long-term sell. So this is going to want to target and take out those positions. So let's go down to the 1 hour and kind of show you guys what I'm going to cover for today for this week. We are on Monday right here. So beginning Monday, Friday, Sunday, and when you look down here, you'll be able to see where my cursor is. You'll be able to see what day it is. So for example, here you can see Sunday. The next day would be Monday, and this is in a 1 hour time interval. So that means that each candlestick is 1 hour. That's what a time frame is. So if I go back to the daily, these are 1 day candles. So one candle is 24 hours. So if I break that down to, or go down to the 1 hour time frame, it breaks that 1 day into 24 hours, right? So that's what we're looking at here. So I kind of want to start off by looking at what we were seeing on Monday before any of this price had printed. So this was what I was seeing here on Monday morning. I wanted to see if price was going to respect that, or if price was just going to break right through, maybe act as some sort of breaker here and continue up, or are we going to tap into this new weekly opening gap and go lower and target some of these gaps? And I put these eye icons because that's where my interest is. So that could be a potential low that it wants to take out before going higher, because remember, we're already in an uptrend. We already got the confirmation indicating that we want to go higher, right? So we could either come back down, fill some of these gaps, some of these BISIs, buy side imbalances, right? And then continue higher, or do we want to take liquidity down here and then continue higher? So that's what my thought process was. If we go down into the 15-minute chart frame, you can see where there's gaps that need to be filled, right? So here's NWOG. Normally with NWOG, we can either see some type of rejection and bounce right off and then go in the opposite direction, or in some cases, not all the time, it can break right through and use that as some sort of breaker, right? So let's go down into the 5-minute, and then we'll go ahead and use my replay button to go ahead and show you what was being played out and what I was looking at. So NWOG was here. I considered this as a buy side, right? Because it was really high. You notice that it's climbing, it's climbing higher. But if you look at the time down below, let me go ahead and move my tool set. If you look at this candle here, if you look at the cursor down at the bottom, that was 8:30. That was opening of the market. And immediately, as soon as that opened at 8:35, it started falling lower. So that kind of gave me an indication that it wanted to go lower, and we could possibly target some of these lows and some of those gaps, right? So if I go ahead and let it play out, we can see right there is where I took one of my entries. If we go down into the 1-minute time frame, me go back. You may not be able to see it, but the first gap after that, we took sell side liquidity here, and we can see this as stage 1 distribution and then stage 2 distribution. I was trying to find a way to get into the market after those moves had already happened and use the time frame that I used to trade, which is right before this time frame here. I usually trade at between 10 a.m. At 11. So for me, this was a entry to target. If we go back to the 5-minute, I was trying to target this low right here. Why that low? Because I'm measuring what I would consider that being the median or halfway of this move going up. So if I don't normally like to pull out the Fibonacci tool, but if we measure from this top right here, the highest point to the lowest point, which is down here, roughly, right? That's 50% of this bullish move right here. So why do I target 50%? Because that, for me, from experience, that kind of targets equilibrium, right? That kind of balances out the market. It's taken enough liquidity to want to continue higher. And I have these marked up from in quadrants. So I have the 25. I used to use the 30%. I don't anymore. If I do, it's only on Fridays, and I can explain that in another video. But I measure these in quadrants. So the 25%, 50, which is the median range or equilibrium, the 75, and then the 1. So if we're up here, to me, if we're in a buy, right? In this case, if we want to sell, but if someone was in a buy, I wouldn't want to buy up here, right? I wouldn't want to get in price when it's extremely high. I would want to get into a price where it's either equilibrium, which is 50%, or in this case, some sort of discount. That for me is a discount price. Not only is it discount price, but there's a busy fair value gap here that in the future could come back and get filled, correct? So if we're in if on the daily time frame we're bullish, I want to get in an entry where it's at a discounted price. But in scalping, in short-term trading, I want to see if I can get into the sell after I see this large move happening, target halfway of this candle, and see if maybe we can target the 50% to then continue higher. And that I would be done for that day, right? So that's why I would want to target, and that's where my TP was, and that's why my TP was where it is. So let me go ahead and delete that. Let's go back into the 5-minute and see if this trade played out, right? Why did I get in here? Again, this is almost the same thing, just on a smaller time frame. So in a sell, I don't want to sell down here. I want to sell when it reaches some type of fair value, which is right here. And because it's up here, it's at a premium price. So I want to sell up there to take profits down here. You can clearly see right at that moment, I was taken out of my position right here. It had hit my stop loss, which I'm grateful for. I'm grateful that it hit my stop loss where it was, because had I not had a stop loss, that would have went completely against me, and I would have had a larger loss than I would have originally anticipated, right? So that's why it's always good to have a stop loss, no matter what, how many positions you put into your trade or how many lots or anything like that. You always need to have a stop loss. Why? Because and I think I've mentioned this before in a previous video, you're trying to conserve your capital. And as a trader, you're learning how to manage your money, right? And that's what your job is. And that is your main job as a trader, is to conserve your capital. So moving forward, this trade did hit my stop loss. And I kind of marked this up just to kind of see where this would have played out. But what it did is it took out this low, which was extremely clean, right? Extremely clean. It would have played out. It would have given me a 1-to-1, if not maybe possibly like a 1-to-2. But as soon as it tapped into this fair value gap, you can tell if you look at my cursor from left to right, it literally tapped right into that fair value gap, filled it, and then reversed. And that's what I was aiming for down here. But I was initially targeting this gap. So for my journal, I'll be looking into taking more of my 1-to-1s, being Q4, just because the market is going to be a little bit more animated in a sense, right? So let's go ahead and take a look at this. Could have been a potential buy, but that's a whole nother conversation in itself. So let's see why I took this next buy here, right? I noticed that we were breaking structure here. And when this dipped back in, I think I took this trade on the 1 minute. Yes, I did take this on the 1 minute. So I saw that we tapped into this. I saw where we were targeting, what the original target should have been. And when I saw this right here, this was, let me go ahead and take this trade right off. But as soon as I saw this right here, this kind of gave me another confirmation that we wanted to go higher, right? Let me go ahead and delete that for you right here. So right here, this is another market structure shift where we could have seen and got some sort of confirmation or feel some form of comfort saying, okay, well, now that we've tapped into and took liquidity down here and we see market changing in structure, going up higher, we can see now, because originally on the higher time frame, we saw that we were bullish. So we know that going into a smaller time frame, that's going to be our stronger direction. So once we see a market structure shift here, we want to wait for a gap to form. We want to wait for some sort of entry. You don't just want to jump into the first break of, you know, this high here. You want to see, hey, where can I find an entry? Where can I find a position to enter, right? This right here, this candle could have been a candle that would have scared a lot of people, because we do have another gap right here. And if you notice, it tapped right into that gap, and it looked like it wanted to sell, right? But remember, you want to trust your higher time frame. You want to trust that direction on the higher time frame, only because it's going to give you a lot more confirmation when you're entering trades, and it's going to push in that direction. More probable, more with more, I guess you can say, I don't even know how to explain it, but you're just going to feel a lot more secure or sure knowing that you're following the higher time frame direction. Only because I personally feel, with the 2 years of experience that I've been trading in the markets and maneuvering, I always see the higher time frame playing out stronger than the smaller time frames, right? So with that being said, I saw this high going higher, and this is where I took my entry. I opened up to where, let's see, this fair value gap right here. I'm going to get it as close as possible, but this is what I saw. This is what my eye drew to. So once we created this, I said, okay, maybe this is just going to be a fake out. We'll see if this is going to close, go higher, or is it going to go lower? Because here, if we were in shorts and you were trying to scalp this should have stopped somewhere right here or at the median range right here and then continued lower, but it didn't do that. What it did instead is it broke even higher, giving me even more confirmation. When these were formed, you can tell it's very, very small, but you can tell right there there's a volume imbalance as well, right? So that tells me that trend is very, very strong. That gives me a little bit more confirmation. When we come back down, I want to see this being supported and not breaking lower, right? So this is exactly where I entered. What my target was because I noticed that, hey, maybe we should just take 1-to-1s because of my first initial loss. I told myself, let me go ahead and just target this next high created from this morning. If you look at my cursor at the very bottom where my mouse is, that shows 830. That's 830's high. So what they wanted to do was go lower, take everybody else out of the position that was in longs during London session, come back, take them out, created this fair value gap, and then we're going to target. My original target was going to be these equal lows, or sorry, these equal highs. Why do I want to target these equal highs? Because it looks too clean. It looks like for people who are selling in the morning, they would put their stop loss here because they would see that as resistance, right? So this could have been a 1-to-1 right here. That trade would have been done and done. But I wanted to target a little bit higher. Why do I want to target a little bit higher? Because one, we know that the higher time frame direction is in a bullish market, and two, let me see here. And two, because we already took lows out. We took lows out. We're already making a change in direction or a market structure shift, and we want to target these highs. So that gives me two certain confirmations: higher time frame direction and lows taken out right here, and market structure shift. So if we play that out, let's go ahead and play it out and see if we how it played out after. There was multiple entries that you could have taken, but I'm practicing entering only 1 to 2 trades per day. If you look here, this trade was probably maybe about a good 2 hours, maybe an hour. Right there, you can see where we took the highs. We literally stabbed right into NWOG, and it looks like from here, I went ahead and just closed my laptop. I didn't continue trading that day or watching the market, because once I take profit, I want to be done. I don't want to go back and give my money back with another trade, right? Again, we're trying to conserve capital, and that's as a trader, that should be your number one concern. So this trade, I entered it at 10:23, and it hit take profit at 11:45. So roughly about an hour and 20 minutes, right? Was what this trade, how long this trade lasted. So let's take a look at Tuesday, because I did take a few losses. Let me go ahead and exit the replay so you guys can see. Tuesday was very animated. I think we had a high impact news driver, and you can check here. I use Forex Factory for all my news. It gives me the day. It's very easy to look at, and it gives me the time. It gives me what pair is having what type of news: red folders, high news drivers, or yellow folders. I don't really consider yellow folders, but I do like to see what price will do after news and things like that. Tuesday was right here. If you look at the cursor at the bottom, that's Tuesday 10 a.m. Let's take a look at what happened on Tuesday, right? So for Tuesday, because we had news, I wanted to kind of wait a little bit, and I didn't want to just jump into the market. So right here, 8:30, we had news. And what I wanted to see, again, you can see where I have the little eye icons. That's where my attention is to. So we still have these lows here that I'm watching, but because we broke NWOG above, I really said, you know what, we really are in a very strong bullish market. I really don't think that this market wants to go lower until, number one, we take out those highs that we talked about and tap into this volume imbalance from the higher time frame. So when news hit, it looks like it took everybody out. If you look closely, there would be, if you were in longs or buys, you would have had your stop losses all under here, right? But when news comes in, news manipulates. So what did it do? It came back down. It took everybody out right here. It didn't allow anybody to continue that long, right? So once it did that, we shot right up. You can tell it's a huge candle, or what ICT calls it, or what he refers to it as, a busy fair value gap. Huge imbalance right here. And again, I don't want to trade when this is happening. I want to trade the after, right? The aftermath and what happens. So once I saw that we had, well, let me see if I can go back so you guys can see what this line is. I just kind of want to show you what that is. So remember, we talked about that high on the daily time frame. This is on the 1 hour chart, but that's the high that we were aiming. We blew straight into that. So let me go back down into the 5 minutes so you guys can take a look at that. That right there was the buy side, right? That's the buy side that we were targeting. So with that being said, once buy side broke, I didn't expect for price to come back down and fill this gap, which a lot of people would automatically do. Um, in older videos, the initial videos that ICT was teaching, I would have wanted to sell that. I would definitely have wanted to sell into that fair value gap. But what it did instead is, if we go down to the 1 minute, it broke, and I saw this as a breaker, right? So I saw that we had this candle right here. We broke higher, and it looked like it wanted to respect. If you really look at it, this buy side was respected perfectly, and that is why I felt confident into a sense where we definitely wanted to go higher. Um, it didn't do that. It took me out right about here, right? So this trade would have played out just like this, right? So yes, we would have been in some short-term profits here. Um, if we wanted to take a 1-to-1, it would have definitely hit take profit. But I wasn't targeting 1-to-1. I was targeting that volume imbalance, which was a really high target. Could had it played out? Yes, it could have definitely played out. But in this case, it just didn't. Again, I was sure that we were going to go ahead and continue longer. It didn't. Instead, it actually went lower. And then I took another sell here because I noticed that we had this low here. So I thought to myself, maybe what this wants to do is wants to tap into this fair value gap here after it had broken structure here, right? Once it breaks structure and it took out these lows, I was certain that this definitely wanted to go lower. But it being a news day, it's very unpredictable. So my second trade also was taken out here, right there. And again, I wanted to just trade 1 to 2 trades per day. So after that, I didn't feel comfortable taking any more trades. But then I saw this, and I remembered that we do have a silver bullet that forms in the PM session, right? So I wanted to test my skills and wanted to kind of see what this market was going to do if it did play out at the 2 p.m. to 3 p.m. Silver bullet time frame. So let me go ahead and play this back and see what we were looking at. So right there, you can tell that after that initial high, we stopped right here and it continued lower. This right here could have been considered as lows, right? Where people, if, hey, you were in longs expecting for price like myself to continue higher, this would have been another liquidity patch where people could have had their stops if they were in longs, right? Thinking, hey, well, this market is going to continue higher. But once it did this and it broke structure, I thought to myself, well, maybe because we finally broke structure, maybe we're targeting these lower lows, and now we're going to have that sell that we were originally anticipating, that we just didn't get to in the last trade. Right there, we had our entry at that fair value gap, and I can go ahead and show you guys right here. I know it's very small. Let me go ahead and zoom in. That was my entry right here, this wick. That's where I wanted to sell. So I'm gonna go ahead and continue this playback. And right there, it took me out. So after that, I was done for the day. I took 3 losses. I went against my trading plan when I shouldn't have. It's one extra loss that could have been avoided, right? If I would have just closed my laptop. So those were my trades on Tuesday. 3 losses. Let me go ahead and move and exit this replay button so you guys can see where price is after we tapped into what we tapped. Where this is where we were targeting Tuesdays. You can see the volume imbalance that I was targeting went against me. And if you sometimes you can look at the 15-minute time frame and watch price play out how it was originally supposed to play out, and you can see price action a little bit cleaner. And that's why I use the 15-minute time frame. Sometimes it works out as a sweet spot for me, and I can see things a little bit clearer. So in this case, for Tuesday, I could have seen, well, hey, this is where we created, and this could have been used almost as a breaker, right? Because here we had a lower low from these guys. We broke above and then came back. And if you look at these candles, they're right here. If you look at these, they don't close. anywhere lower from here. So this could have been an entry right here on the 15-minute. We could have took buys here, put your stop loss here. Yes, it would have been a bigger stop loss, but your reward would have been a lot higher than, your loss would have been. So that could have potentially been probably like a 1 to 5 or a 1 to 4 trade. You would have entered here. This would have put you in slight small drawdown, but then it would have hit your take profit here. So that's just something to kind of take into consideration moving forward. Tuesday, let's take a look at Tuesday's trades. I'll go ahead and move these tools here. So Tuesday morning, I woke up and I saw that we were already had taken this out, right? For me, I think I had posted this on Instagram. We were finally at this volume imbalance, which I wanted to see get traded into, and then see shorts going into later that day. One second here. All right, so where was I? Here we go. So once I saw this rejection right here, that gave me confirmation that, hey, maybe we do want to go lower, right? Why? Because we were already tapping into this volume imbalance. We have already taken the highs, or where stops would have been placed if you were in shorts. Where is it more likely to go? At this point, I wanted to see shorts, right? So once it tapped into that, I immediately saw that we created this volume imbalance right here, or sorry, this fair value gap. Let me go ahead and see if I can show you this to you guys. It would have been right here. So let's go to the 5-minute time frame. And I use the replay button for you guys so you guys can see what I was looking at before the market actually played out. So you guys can see, hey, what was my thought process during that time, right? So once I saw this wick and it gave a beautiful rejection, or what I would have considered a really clean rejection, tap into that volume imbalance. And yes, it is definitely permissible for this to go higher up and then reject back down outside of the volume imbalance. It's not always going to stop directly right there. It's going to want to stab super high and then come right back down, right? What did this create? If we look at this box that I created, that's on the 15-minute time frame. But if you look at the 5-minute, your entry would have been right here, or my entry was right there. If we look even lower to the 1-minute time frame, this is what my entry looked like. So we drop lower, we make this huge market structure shift down, right? We're breaking all these lows, going up. Excuse me. Continue down, continue down. And what I'm looking for, I don't want to jump into the market right away when I see this breakdown. You want to find some sort of entry, right? You want to find some sort of clean structured entry. You don't want to just jump into the market because you want to force something, right? And this is speaking from experience. You don't want to force something in the market because clearly you saw from my previous trades that could be something that could hurt your capital. So what I wanted to see was some sort of gap or some sort of high being respected where it can just break down and continue lower, right? So my entry was right here, and I'll show. It's a very, very small, but on the 1-minute time frame, when you're trading at that frequency, you're going to be able to see things like this. So if you look here, we had already broken structure right here. This reversed, and then this continued on down. And what I'm looking at is these big candles and see if there's some sort of gap for me to enter, right? Let me stretch this out so you guys can see it. It's, again, very small, but it's there. Right here. On the 1-minute, you can find setups like this on the 15-minute, 5-minute, 1-minute, but I like the 1-minute entries. So when this went in, stabbed in, it is okay for candles to create wicks like this and then come back down. What you want to see is where does it close, right? And if we look here, let me go ahead and take off this 15-minute right there so you guys can take a better look at it. If you look at the candle, it doesn't close anywhere above this high, right? If you look here, it actually respected this one. This one pushed up just a little bit higher, but what did it do? It literally, from, if you look at this high on the wick, on the blue wick, it came into this 50% of the wick. You see this wick right here? What's 50% of that? Right there. 50%, and then it just dropped lower. So my entry was here. I had already entered right there. And then if we want to look a little bit higher just to see what we were targeting as far as what TP was, you notice that my stop loss was right here at the top of that candle. And what was I targeting? These lows right here. If you look to the left, this is my target right there. I was looking at that as sell side liquidity. And if we look to see how that played out, you can take a look right here. Boom. And that was it. I was done for that day, right? If you look here, TP was smacked and it was done. And this is why I love trading between these hours. If you look at the bottom, entry was at 8:40. I was out of that trade by 9:50. So roughly about an hour for the trade. So guys, there's nothing out there like this. You can make as much money as you want or as little money as you want in these markets with in a very short period of time. There's nothing out there like that I've found. I've worked in sales, I worked in service, I've worked in many different locations, many different things. I've went to school for nursing. Like there's so many different things that I've tried, and I've never seen anything like this where you can make an income off of this in literally in 1 hour, right? You find your one setup, you find your strategy, you follow your rules, and these are the type of trades that you get when you follow your rules, right? So moving forward, let's go ahead and see what we were doing for Thursday. If I'm not mistaken, I don't remember exactly our Thursday trades, but they're going to be right here. So let's take a look at those trades and see what we did that day. See, it looks, and remember now that price has stabbed into that volume imbalance. My initial thought was, well, we're going to have a small retracement, right? Now that I remember seeing this trade, that's what my thought process was. So let me show you what we were looking at. I'm going to go back into the replay mode so you guys can take a look at what my thought process was before all this price action was shown. Let me go into the 15 minutes so you guys can take a look. So what I originally was targeting, so from Wednesday, right? If you look down here, Wednesday's trade, we dropped lower. We still had this big fair value gap that we created, or BISI that we created from news the previous day. And what I wanted to see was that gap be filled, right? Before anything else. So whenever I'm looking at shorts, I want to enter in some sort of fair value gap like this. So that's what I was targeting. I wanted to take a short-term buy to target this high, enter shorts here at this fair value gap, or because it's in sales, in a selling motion, or in a bearish trend. This candle right here is considered a SIBI, right? Sell side imbalance. So I wanted to see if I can enter a short-term buy into that fair value gap and then short it, right? So clearly you can see what my thought process was and why I entered where I entered, right? So I saw that we were respecting this area here, but when sometimes you can tap into a fair value gap and it can reverse immediately, and you can see that here, right? I didn't take a trade here at the beginning. I was waiting for my hours, which were between the hours of 10. You can see it's roughly 9:40, 9:50 here, and 11. So when I saw this, that's where I wanted to enter. If we look, there's another one here that we can see play out. Wanted to see if this was going to respect. And that's where one of my entries was. And go back and see if you guys can take a look. I think if I'm not mistaken, I did enter, and I want to say I took that loss, if I remember correctly. Yeah, definitely. So here you can see that I took that trade right here. I don't remember me taking this one here. Because I don't see where my trade would have been an entry. Go ahead and take that one off. Right here, this is an entry that I wanted to see play out and see if we can again target into this part right here, right? Clearly, it didn't do that. It reversed, but I did mark this area here to see if it would respect that, because you don't have to take a trade um, based off of just one idea. You have to adapt yourself to see what market is printing and what it's doing, where it could potentially be targeting. Because remember, at this point, we're in shorts, right? We want to see market go down. Why? Because we have already tapped into a volume imbalance. Again, this trade here was a low probability trade. Why was it a low probability trade? Because we were already in shorts. Market was already in a bearish market. Could have it played out? Yes, absolutely. But the probability of it was very low. And that's why I took a loss here, right? Yes, we do see some sort of fair value gap. Yes, we could have tapped into a 1-to-1. And if we would have tapped into a 1-to-1, my target would have been right here at this fair value gap instead of the higher one that we were aiming for. So here, this would have been a perfect sell opportunity to target the lows down here because we were already in a higher time frame bearish market, right? So this was another entry that I saw here. I wanted to see this play out as a breaker, right? So what is a breaker? A breaker is when you see the market break up lower, you see this blue candle right here, it's going to tap right into that and then sell immediately. So that candle right there, we want to see that tap into it with this little candle. You can see my entry being placed right there. And then I think, if I'm not mistaken, I took another entry. Yep, right there. So my second entry was right here at the entry of this fair value gap, right? And that's totally permissible. We can take that. And you can even see here that this could have also been another confirmation. So if you look all the way through, there's a fair value gap. So that was balanced right here. And we want to come back because if you see this fair value gap, you can see that this one failed, right, to go higher, and it disrespected and it broke. But if you go all the way through, this is already a balanced price range, but this right here has not been tapped into, right? And that's what I mean by cutting across. So right here was my second entry. So let's see if this guy played out. And this is just me moving up to the higher time frame, 5 minutes to each candle, so you guys can see it a little bit easier. And you can see right there another lesson that I didn't apply. So remember, this week, because we had a lot of news, we wanted to practice and keep the rule of sticking to a 1-to-1. If we had a 1-to-1, would have it played out? Absolutely, it would have played out. What was I targeting? This sell side liquidity right here, right there. That's what I was targeting, right? But because we have already tapped into this fair value gap, it could be permissible. And yes, because it is news week, we could have reversed. So I did take 3 losses that day. There was 3 complete different entries. After that, I closed my laptop. So number 1, I took an extra trade that shouldn't have been taken. And 2, we're not aiming for 1-to-1. So that's something that I need to journal down and write down for myself. Let me exit the replay button and we can go ahead and quickly move into Friday, because I do want to show you guys everything. I don't want to hold you guys up too long. I just kind of want to show you what my thought process was for those days. So let's take a look at the replay button. Look right here. I took a small loss and then we were able to take 2 wins after that. I remember that very clearly for Fridays. So let me go ahead and play back the replay button so you guys can take a look at what my thought process was. So what have we seen from Thursday? We did see that price continued up a little bit higher. Did it ever reach the highs that we were aiming for? No, it didn't do that. Did it give us did it give us a reason to maybe want to go higher? Yes, absolutely. We kept going a little bit higher, a little bit higher. And then here we kind of started getting a little bit of weaker price action. Here, though, let me go ahead and show you a little bit closer so you guys can take a look. But it just barely did, but it took out these highs. I don't know if there was a fair value gap to the left, but we can take a look. I'm going to go ahead and mark this right here just to quickly scroll back and see if we had tapped into some sort of fair value gap. Even on the 1 minute, because if you can see here, this could clearly be a bearish order block that if it could have tapped into and give us a confirmation to go lower, right? So maybe it didn't tap into this volume imbalance, but if you see here on the 1 minute time frame, you can clearly see that it tapped into some sort of fair value gap from previous days, right? So that right there, moving forward, let me go ahead and place that again so you guys can take a look at what I'm talking about. So if you look at this fair value gap, right? Let me go ahead and place another one of these lines. So if you look at that, and let me go ahead and move forward to where price is right there, you can see that it's very close. Let me see if it actually tapped into that high. It doesn't look like it tapped that high, but it got very close and it gave us a very clean rejection from there. But from there, we can take a look that was the reason why. Go ahead and take these off. That was the reason why it went lower. It did take out these highs here. I had that marked up because that's why I had my arrow showing there. It had taken out these highs and then it just clearly just tanked right here. When this was broken, that was my confirmation that we may have wanted to go ahead and go higher. Go ahead and mark that up right there. And we can see that play out. And you can see it took me out. Notice this right here. Notice this wick, right? So what is that telling me? This could potentially want to go higher. You see this rejection right here? And what did it leave here? It left clean highs, right? Yes, it took the highs from here, but it still wasn't enough for it to say, hey, we took out those highs completely. So let me mark these guys up so you guys can take a look at what I was aiming for. So this was my first initial loss. If you look at the time, that's within my trading time frame. So that's totally permissible. Again, I would much rather have a short stop loss than have a stop loss that would have went completely against me, right? So let's continue playing this back so you guys can take a look at the second entries that we saw. And for these entries that were a little bit closer to lunchtime, there's different time macros that we can go over later in another video and why I trade the times that I trade. But lunchtime also is a good time macro for you to see some sort of stops or liquidity runs. Right. So let me go back and see so you guys can take a look at what my entries were. This was my entry. So I can mark this up for you guys. I'm trying to find the second entry so I can go ahead and mark that up for you as well. Right there. If you look at this gap right here, that was my entry. So once I saw that we had, this would have been a beautiful entry right here, this gap. But I didn't trust it that much because we have another gap right here that could have potentially been a sell. But once I saw these rejections that I saw this second market structure shift, it created this gap. And that's where my entry was. Yes, there was wicks, but if you put your stop loss at the previous low, it would have never reached that. So it would have never taken you out. The second position was right here. Let me go ahead and show you guys a little bit further so I can show you what that entry looks like. This was, so if you look at this gap and this, I include this because it doesn't have any price coming back. Like there's no wick from this previous candle. I'm trying hard for this cursor not to block it, but if you look at this candle, it doesn't have a wick where it overlapped this wick, or sorry, this candle, like this one here. You see that the wick overlaps this candle? Right here, there was no wick that overlapped to say, hey, there was enough people to get into this trade or entries, right? Or to fill. Like this one here, you can see that this wick dipped a little bit. But overall, I included the whole up until this candle right here. You can see my entry being right here. When it gave me this, so I was trying to enter somewhere right here. But when it gave, I didn't want to enter on this wick. I wanted to give me more of like a deeper entry. So when this bearish candle came down and it was rejecting, I entered right there. It came back down. You notice that this candle closed right here, so it just wicked again. I put my stop loss here at this previous low. It would have never reached that. Man, and the rest was history. Let me go ahead and play this out so you guys can take a look at this play out. But if you really look at the aspect, and like if you take a step back and really look at what trading is, all it is just managing your risk. Without risk management, there's no plan, there's no strategy, there's nothing that you can have structurally to save your capital, right? And that's all trading is. All trading is making sure that your losses are small, just like these. You notice that my stop losses are very small. And my take profits are pretty good, right? But this trade, again, we should have applied a 1-to-1, which would have played out perfectly, that 1-to-1, right? Because that's what we were practicing this week, and that's what the lesson was. But because we had really clean highs right here, when it looks really clean, that gives me an indication that eventually it's going to run up there and take those highs or lows, right? But as far as the previous conversation, or the sentence, or what we were talking about right now, is as a trader, that's what your job is to conserve your capital. One, so you can trade another day. If you take too many losses, 1, 2, 3 losses, turn off the laptop, close your laptop, get off the phone, move on with your day, focus on something else, right? Do something else. Don't come back trying to revenge trade the market, get your money back, nothing like that, because I've done that. I've been there. I've blown accounts doing that. So for me, that's what that is almost what you call, I guess you can say, like a sting for me. Like when you have something happen to you, you get hurt or something like that, you're going to remember that because you had some kind of emotion attached to it, right? So that's almost like a scar that you create by trading in the market. So now that you have that scar, now that you know, hey, this isn't what I want to do, I shouldn't be doing that, you're going to learn not to take trades without having some sort of stop loss. You need to have a stop loss, whether you want to, whether you like it, you don't want to do it. You're going to have to use a stop loss because, like I said before, you're trying to conserve your capital to grow that, right? You're not sitting here trading with no stop loss like I did before and then blew your entire account because you were in the wrong. You would have been so much happier knowing that there was a stop loss there versus blowing your account. And you're going to kick yourself in the ass because you're going to say, I should have listened to him. I should have listened to that little voice in my head that says, put on your stop loss. Don't be an idiot. Don't blow your account. And that's just the simple lesson. That's just in the great scheme of things, that's what you're doing. You're just trying to grow your account, keep your losses very small, and keep your wins high, right? Um, but with that being said, we had a great week. I was really excited to see these trades uploaded and played out for you guys. So you guys can, like I said, can take a look at what my journey is looking like, and we actually tapped into those highs, and look what happened. Even though we weren't aiming for those highs, I was aiming for these highs. But if we look at that 15-minute time frame that we were looking at from those previous days, look what it did. It went right into that. Maybe I wasn't right just yet. This day, I was waiting for it. But you know what? That trade actually played out. If I would have waited, I wouldn't have taken that loss and been too impulsive with my entries. If you look here, that gap, those highs, it in fact went, stabbed in, closed right underneath, and then dropped lower. As far as this week, um, I don't know what the market's gonna do until tomorrow, but what I do see is that we did create a new weekly opening gap. So I'm gonna go ahead and mark that up and uh, leave that in closing, and just go ahead and follow your rules, guys. Follow your rules, follow your rules. If you have a strategy, stick to it. Don't be switching strategies left and right, back and forth, because then you're never going to have that certainty of saying, you know what, I put in the work, I put in the effort, I put this into a demo trading account, applied what I've been learning, and watch it play out. Watch it play out, trust yourself. And most importantly, man, follow your rules. Follow your rules, man. That's all you need to do. If you stick to your rules, you follow your strategy, you'll be completely fine. Don't go out there trying to trade, you know, 20 lots, 10 lots, at the very beginning, because you're going to overwhelm yourself. You're going to have anxiety. You're going to bring more stress to yourself. Start with small micro lots, nano lots, 0.01, 0.02. Start there, build consistency. And then once you build consistency over the course of maybe 3 to 4 months, even 6 months, once you've been profitable in a demo account, then you can go into a funded account or put some money into a live account and then start from there. And keep the same rules. Don't try to take the big winners. Don't try to make 1,000, 3,000, 4, 5, $10,000 a day watching all these people, on social media, feeding you this fake stuff, right? Yes, cool. The cars are flashy. The houses are nice. I really don't care much for jewelry or anything like that, but I see these traders, buying a lot of jewelry, watches, diamonds this, diamonds that. Man, look, I'm just a regular guy trying to outpace the system, right? I don't want to be working for the rest of my life. I don't want my parents working for the rest of their lives. I don't want anybody else that I love, and that's, essentially close friends of mine's, if I can create this to show that there are other and better ways to create an income. And number one, the real reason why I made these YouTube videos is because I want to make it an example, whether this can be a real thing that people can take into the skill, figure this out, and make an income to get your freedom back. You know what I mean? You don't have to work 8 hours a day, 10 hours a day. You know what I mean? 40, 60, sometimes some guys I see out here busting their ass 80 hours a week to come home with a really good check, probably. You're probably making amazing amount of money. And I don't knock people who make, an honest living working hard, but think of what you can do making what you make in 80-hour weeks or 2 weeks, waiting for that paycheck, when you can make that in 1 hour. And you've seen me do it. You've seen the trade play out in 1 hour. If you can make let's start small. If you can make $500 in 1 hour, and these type of trades play out multiple times a day, and if you stay consistent with it, think of what that could really do for you and your family, man. Like, you get your time back with your kids, you get time back with your family that you love, You get to experience more with them, be present, be there for them, right? I want to be there when if my kid has a choir concert, or if my kid has a an event going on, a football game that they want to go to. I don't want to be that parent that says, "No, you can't go because I'm working," or "No, I can't attend because I'm working." Those are important years of your kid's life that you're never going to get back. You can't have a kid and say, "I'm going to enjoy my time with them whenever I retire." Man, you're going to retire at 60, 70, 80 years old. In most cases, people can't even now retire because you don't make enough income to support yourself when you retire. Just keep that in mind next time you come to my YouTube videos. Um, there's a reason for this. There's always a reason why we want to show what we do, right? This is my reason to show you guys why this is a great skill to have, and why I'm immersing myself deeply into these YouTube videos, into these markets, and pouring myself hours after hours after hours trying to learn this concept, trying to learn this strategy, right? Um, but with that being said, guys, happy trading this week. Be positive with everything you do. If you do something, do it with all the effort, man. Do it with all the love that you have. Put in the time, put in the work, and eventually you'll see things play out for you. Um, I'll see you guys next week. Later.